Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, July 9th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I'm the president and founder of Simple Market Signals at simplemarketsignals.com. Now, we will come back to this chart in just a couple of minutes, but I want to move over to a weekly chart of the S&P 500 so we can kind of get the big picture as to what has happened for this week. This chart, by the way, starts at the beginning of 2021, so this gives us a pretty good idea as to what has taken place in the S&P 500 for calendar year 2021 so far. Now, over in the upper right-hand corner, I want to point out that the S&P 500 was up 40 basis points this week, so 0.4%, and we did close at a new all-time weekly closing high, 4369.55. And so even though we were only up 40 basis points, that was just enough to get us to a new all-time weekly closing high. And where we closed today, we closed 3% above the 10-week moving average and 12% above the 40-week moving average. So if we were to pull back to the 10-week moving average anytime soon, you know that that's going to be about a 3% drop, right? Nothing huge, but even a 3% drop gets kind of uncomfortable, right? So if that happens, don't be alarmed, right? A pullback to the 10-week moving average, it's pretty normal. You can see over the course of this year, there's been numerous times we pulled back to or even undercut, at least intra-week, right, the 10-week moving average. We've had a couple of weeks where we've closed beneath the 10-week moving average, but so far this year, that's only happened 3 times, right? One right here in January, one in February, and one just a few weeks ago in June. So, it does happen, right, where you pull back to the 10-week moving average or close below it. But just understand that a pullback to this area right now, 3%, a pullback to the 40-week moving average, which it's been over a year since that has happened. I'm not going to get too deep into that. If you aren't familiar with how long it's been, go back and look at last week's video where I spent a little time going over that and went clear back to 2016. So if you want a little bit more intel, a little bit more data on the regularity behind the pullbacks to the 40-week moving average over the last 5 or 6 years, please go back and watch last week's video. So again, not a stellar week, but a decent week in the market, another up week, and another weekly closing high for the S&P 500 this week. The next chart that we're going to look at is a 5-day, 5-minute candlestick chart of the S&P 500. Now, keep in mind, because of the 4th of July Independence Day holiday, the market was closed on Monday the 5th. So this 5-day span covers Friday, July 2nd. And then, of course, Monday the market was closed. So we have Tuesday, Wednesday, Thursday, and Friday here. So we were only really open 4 days this week for trading. And you can see it was kind of a volatile week, right? We had a little bit of a sell-off early on Tuesday and then bounced back and then had a slight upward trajectory on Wednesday, gapped down on Thursday, and actually hit the lows of the week at 42.8937. And then Friday, today, the 9th, man, just a really nice day here, actually up 1.13% for today alone, Friday the 9th. And we hit a new intraday high just before the close. Again, each one of these candles represents 5 minutes, so it wasn't the very last candle, but the one right before that, right, 5 minutes before the close, we did hit a new all-time intraday high on the S&P 500 of 4371.60. So the low for the week, 42.8937, and that was during the morning trading on July 8th, Thursday, July 8th, and then on Friday the 9th. Not only did we hit a new all-time weekly closing high, a new all-time daily closing high, but a new all-time intraday high as well on the S&P 500 of 4371.60. The next chart that we're going to look at is a daily candlestick chart of the S&P 500 that goes back to the last day in May, as you can see here, May 28th, and then covers all of June and the first few days here in July. So I really wanted to just focus on the last month and a half or so, and really what is happening in the S&P 500. And this last 3 weeks has been absolutely stellar. And this double bottom that we had during the month of June on the S&P 500, as seen on the daily chart, really set up this 3-week run that we've been on. And a little choppy this week. Again, we just looked at the short term, the 5-minute candles, and so we had a ton of chop this week. And we know that we were only up 40 basis points for the week, but that was enough, right, to get us that new weekly closing high. But Friday alone, we were up 1.13%. So really, Friday the 9th kind of saved the week. Otherwise, this week was kind of looking a little ugly, right? And on Thursday, it wasn't looking too good, especially early in the day. But we had that nice bounce back in the afternoon. Then, of course, some stellar trading here on Friday the 9th. Again, we were up 1.13% for the day. So a new all-time daily closing high of 43.69.55 on the S&P 500, and a very nice 3-week run here after a double bottom during the month of June. So, guys, I know there's a lot of people that are out of sync with the markets. I would invite you to take a very close look at Simple Market Signals. Just before I made this video, I had one of my subscribers call and thank me again for what I do. And yesterday I had another guy call me, and he was telling me that he's made tens of thousands of dollars this year because of his subscription to Simple Market Signals. Tens of thousands of dollars that he otherwise, his words, not mine, tens of thousands of dollars in his 401k that he otherwise would not have made, and he attributes that directly to his subscription to Simple Market Signals. So, whether you're working in a trading account, in your 401k, your 403b, your IRA, if you're a financial services professional, I have a lot of financial advisors. I have hedge fund managers, people that run RIAs, mutual fund wholesalers, but a lot of my clients are individuals that, executives at a company that, have hundreds of thousands of dollars, or in some cases millions, in their 401k, and they're using Simple Market Signals to help them manage their own money. So, guys, it's extremely cost effective and extremely valuable. So please, if you're not yet a subscriber, take a close look at Simple Market Signals. And with that, I'll tee up a little bit of information here on how you can learn even more about Simple Market Signals and how it can help you. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.